Welcome back to another market closing live stream. Well, we just had Jerome Powell talk, and well, you can check out that video to see how that went. But boy, oh boy, this market is nuts, and we're not expecting this nutsness to let up until September to October. In the meantime, we got some big earnings coming out today. We have on deck Apple, Facebook, Qualcomm, Ford, Teladoc, eBay, ServiceNow, MGM, and Grubhub, and what else do we have here? Logitech, United Rentals, Cheesecake Factory. Oh my gosh, this is endless. What else do we have? Century, Kilroy, blah, blah, blah. Okay, so Invitation Homes reports. Wow, we got a lot of names today. I don't know how we're going to be able to cover these. Obviously, we'll cover the tops. But boy, oh boy, the Lending Club is reporting today. This is a massive, massive day of earnings here. Absolutely incredible. So I'm super excited to see how the market reacts today. We obviously listened to good old Jay Powell, and now it's time to take a peek, see how the sticks are behaving after Jerome Powell's talk. Keep in mind, later today, we will also have, which I will make sure a little pop-up happens after this, we will have we will listen to Joe Biden's primetime announcement of his infrastructure plan. We've already seen some pretty crazy things in regards to real estate, especially lots of new taxation plans. And so we will definitely be paying attention to all of these. All right, let's get into the sticks right now, see what's going on. And I'm going to reposition myself. There we go. Let's get back over here in the corner so we can see these stocks a little better. There we go. All right, folks, here we go. Leading into the close, we have some losers. We have some losers called Pinterest and Enphase losers. Looks like Enphase or Pinterest here is like nailing some of the lines that we've drawn, at least for the day. Look at that. Our lines are like perfectly hitting, and these were lines that we established quite a while ago. But anyway, perfectly nailing that line today. Enphase, not so much. So these are some older lines here. But let's look at all stocks here. Let's see what's going on. Spotify's down 12%. Enphase down almost 14%, trying to recover into the close here. Pinterest is doing the same thing. Spotify down 12%. Skills, 5.8%. AMC is down 5.8%, though trying to rally right now here into the close. We'll see what kind of rally we get. Starting to get a little bit of a breakout there on AMC. Spirit Airlines, 5.18% to the downside. Rough move there on the airlines. ArcLight and SPAC merger down 4.5%. Fastly down 4%. Playboy down 3.89%. SunPower 3.8%. Big Digital 3.6%. Starbucks 3.2%. Voyager Digital down 3.08%. Microsoft down 2.72%. Zom's down 2.62%. And then we kind of get through some of the more moderate movers here. Lemonade, Matterport, these guys down a couple percent. Tesla's still down about that full percent, sitting right there at under 700, just like Coinbase is resting under 300. We can then jump on over to the gainers for the day. Let's take a peek and see what's doing well here on the gainers. We've got Dogecoin still sitting around 31 cents. Pretty much been the same. One here about Facebook. Let's see where Facebook is. Facebook's doing decently at 1.76% on the day. You have BTX up 78%. It's a immunotherapeutics company here. Big explosion here. I'm going to keep looking at others, though. 14% on Clover. Mind Medicine up 13%. Rescheduling that interview with Mind Medicine. What's the breaking news here? Hold on one second here. Let's see what they're covering.
Tapering those asset purchases or that stimulus.
Old news. We did cover this.
Strategist at Jefferies. So, David, what's the market takeaway? What's the trade off of this?
Oh, he's got the coolest set ever.
I don't think there's a huge change either way. It was very much, I would say, as expected. I think one takeaway that I came away with about 15 minutes in, Sarah, was he talked about maybe not needing as many of those jobs back. I think that was the first time I heard him say that. So I think the Fed's a little scared that technology and the adoption of a lot of technologies during the pandemic and the success of companies in sectors that had invested in technology relative to those that hadn't might mean that some of those service sector jobs, those 8.5 million we still need, could be a little more difficult to get. And I thought that was the most interesting thing I heard from him today, a little bit of skepticism. Usually he's been a lot more optimistic on getting those jobs back. And I didn't hear that as much today. So I thought
it's a luscious green lawn you're sitting on there, by the way, David.
Looks like we're interrupting your tanning.
Your gardening.
Hang outside all day doing my Zooms. I figured I might as well do them with you guys too. It's nice.
Very nice indeed.
I'm back up in the New York area. It's beautiful, 70s up here. So.
I know. I'm envious you're outside. We must get back to the topic at hand, David. What are you advising your clients to do at the moment in terms of positioning? Does today's meeting mean you kind of continue more of the same of believing stocks go higher? I think you don't want them to hedge at all, though, with any kind of offsetting bond position. Is that right?
Correct. Yeah, we're not advocating our usual risk parity. We still think bond yields have a little bit more to run, up toward the 2% or possibly a little bit more by the end of the year, especially as Europe reopens and maybe the European fixed income markets have a little bit of a weakness because of that. But I think it's just, Janet and Jay, those are our hedges. If something goes wrong, I really do believe they're going to step in very quickly and they're going to be very proactive with policy measures that will soothe any market hiccup. So rather than have the fixed income be our hedge, because it's so expensive and the yields are so low, we're just we call them the Jays, Janet and Jay. So it's SPOOs and Jays. That's been our trade all year. It's run rate, it's up 12% for the year. And run rating at over 30 or 35%. I kind of still like it. We're here in almost May and I still like it.
David, we are out of time.
You look like you like it.
Thank you, as always, for joining us, David Zervos.
Okay, I have to say that's a pretty cool set the guys got. All right. So, BTX here. He's a company that's really up, at least from what I could tell. No news, no catalyst, just running. All of a sudden up 80% here on the day. Brooklyn Immunotherapeutics. It's been one that has been halted a few times intraday here at $44. This was a $9 stock a couple days ago, actually lower. Let's see here. No, okay, hold on. Let's go to more recent here. There we go. This was a $9 stock on 420. And it was even a $3 or $4 stock before that. And it's just been on this exponential path here. Again, no real news that I could find. Clover's up 13%, Mind Medicine 12, Shopify 11, Marathon. Typical runners moving here today. Canoe also running back up over that 950 range. Blink charging up almost 7% here. Charge points up. Shift up a little bit by 4.4%. Ethereum sitting at 2730. It's kind of where it ran to during the Fed press conference. Etsy back up over the 210s. Wayfair. Well, here's Win. Where's Wayfair? Can we get Wayfair in here? eBay before earnings up 1.5. Wayfair sitting at about up 0.25%. So, okay. So, good mix between green and red today. I'd say just the only two big losers here being Enphase and Pinterest. We'll see how the rest of the market does, though, with some of the big earnings that we have coming up within the next about 14 minutes. We will start getting earnings coming up. So we'll see what happens here. I did not see any BTX news. I did check for BTX news. I know they are working on cancer research, but I have not seen any kind of research there.
He reclaimed the crown as the world's richest man from
Musk.
Do
we get a commission?
He's worth now, by the way, $202 billion as of today, as we last checked.
Why not?
And I think Musk is at $178 billion. Yeah, just chump change between these guys. But it's interesting how if you think about $200 billion, we put a couple $1 billion in his pocket, and little old me and you. Isn't that sick? Now, here's the irony. I think tomorrow, if they don't do the stock split, and by the way, I'm not saying they will. I'm just telling you what these traders are telling me. They're all predicting it's coming in 2021, maybe tomorrow. But if they don't do the stock split, maybe shares go down. One thing that Redler mentioned to us, and it's a good point. They've been flatlining except for the recent pops for the last 9 months, despite really good solid earnings. They're going to do they're going to have solid earnings tomorrow. So it's obviously a technical factor with the share of the stock being at $3,000, being so high that retail can't get involved. There is not total unanimity on this stock split stuff. We've talked to other investors, although they were kind of in the minority of the sort of range when we've been polling people that say, but because you can buy fractional shares, people could still participate. I don't think that's the same as splitting the stock and actually getting in the Dow Jones Industrial Average. That's one of the reasons why they're not in the Dow, because their share price is so high, and that's a good selling point. So. This is why, Scott, we're going to talk about this tomorrow, pre-earnings. I think, Scott, you booked Scott. We're going to have a nice show tomorrow, as you always do.
Yeah, we'll have it out. Pre-Amazon earnings tomorrow, and Apple and Facebook coming out in 12 minutes. When we come back, much more straight ahead. We are down about 120 points on the Dow. S&P, though, still clinging to 3 points of gain. Stay tuned. We're coming right back.
It's intense. At the same time, we've got the 10-year Treasury falling. Down to 1.61%, down off the high of 1.65% when we got those FOMC minute meeting notes. If we go back out to the 3-day here, 3-day that dropped to 1.6 really eradicates the gains that we've seen pretty much all day today. If we go back onto the 1 month, 1.6 brings us back to somewhere around April 14th, so middle of April. Did have a nice lull here. Remember, cryptocurrencies also had a lull in pricing when these treasury yields came down. So all eyes really on those treasury yields as the markets just react to talk from not only Jerome Powell, but also earnings. And they're very correct. What Fox mentioned here is Amazon's been flat for months. Gosh, we've been observing Amazon flat since December. We're like, wow, Amazon's just been trading flat. It's like we had these massive big movements to the upside, and now we're kind of range bound for a bit. And I really think it's going to be until that September or October phase for us to start seeing those ranges actually start gaining again. And we'll see how it goes. So we'll stick to the strategy. All right, let's see what other news that we have right now. I'll check out some top news here. We are 10 minutes away from the closing bell. All right, let's see here. Biden makes his call to action speech today. Google is saving over $1 billion a year by working from home. Telling you, folks, these corporations are getting way more money efficient with all the cost cutting they're able to do with the working from home factors. This is something we saw coming a mile away. We were talking about it during the crash last year. This is going to be a great way for corporations to get richer, and that's exactly what's starting to happen. And now the market's already built in a lot of those expectations, but still, I mean, it's phenomenal, and it's going to help profit margins grow in time as well, especially as COVID costs start going down, and then we really start seeing those profit margins push up. Alphabet was as high as 5% intraday. It's currently up only 3.6%, so pulled back a little bit. Kind of feels like we got a little bit of a shoe, a little bit of a boot, so to speak, on some of these stocks, weighing them down a little bit. Same obviously true with the end phase and the Pinterest here. Both of these somewhat red candles sticking here. Let's see. Yeah, Pinterest red candling into the close, and end phase looks like it's doing approximately the same thing here. Might be an opportunity to pick up some shares. Let's listen into CNBC Hill for a moment.
Shippers, home builders. I don't need to hear whether or not the punctuation in a Fed statement has been moved from the second sentence in the fourth paragraph to the fifth sentence. It's not important to me. So there were no surprises in this, like none whatsoever. The Fed is going to go out of their way to telegraph to us if and when there will be any sort of tapering. We'll have plenty of time to digest it before it even happens. That was the playbook in 2013, leading to the 2014 rate hikes. So let's just be patient. Let them do what they're doing. Every data point you want to write a blog post about, the Fed sees that data point too. You're not going to outthink them. They have the job at hand, and I'm not really that worried about it.
A number of tech giants reporting earnings and revenue beats, but moving in.
That was I have to say, that was very good. I was impressed with that sort of like angry summary we got there. That was good. I like that because it's very real. It's just like chill the heck out about the Fed. So important right now. So keep listening in here.
PC sales during the pandemic, and AMD started the session higher, but is now trading in the red. The chipmaker raised its annual revenue forecast, and on the call, CEO Lisa Su said the company is seeing improvement in the chip supply. Mike Santoli, the fascinating thing with the Google and Microsoft results is just those two stocks alone pretty much explaining why tech is the worst performing sector and communication services is almost the best performing sector. Massive moves in opposite directions, though both fabulous results.
Yeah, and I guess really just kind of offsetting one another in terms of the aggregate index right now. It really just a mark of how good numbers have to be to really get investors incrementally excited at these levels, because that's how good Alphabet's were. Microsoft's not so much. Also, Microsoft certainly perceived as having less leverage to an accelerating economic story this year. So it's not as if people are afraid that the fundamentals are going to run away from them right here. But again, you know, NASDAQ is kind of comfortable at these levels, and you have all this movement in individual stocks below the surface, but it's not as if it's really causing a revaluation or a reassessment of the big picture stories yet.
Well, along with that Alphabet surge in the market, Facebook is higher. It is one of the names that is set to report earnings after the bell. Julia Borston with a preview for us now. Julia.
Well, Sarah, more important than the numbers, 33% revenue growth projected on 38% growth in earnings is what the company says about what's ahead. User numbers will be scrutinized as a sign of whether the economy reopening is going to help user growth as it did Snap or hurt as it did Pinterest. Facebook is expected to add 30 million daily active users and 60 million monthly active users. And investors are looking for guidance on the impact of Apple's operating system change, which will limit Facebook's ability to target ads. They're also going to be looking for more on the potential for shopping, as well as the tools Facebook is offering its creators to stay and create content on its platform. Sky's back over to you.
Julia, thanks so much for that. Facebook is up 1.5% as we stand. Apple's just slightly lower, about 0.5% lower. Josh, what is your take on all four of these names, the two that reported last night, the two that we've got to come, and the fact that Google's kind of given up a bit of its gains during the session?
Okay, so I guess we'll start with Google. I'm long. It's the best performing of all of these FANG names year to date. I've been in the stock for years, and I really feel that YouTube, as much as Alphabet shares have gone up, I feel that YouTube is still being undervalued. And when
I love this guy. That's what we said yesterday.
Like, break up Amazon, break up Google. I wish you would, because standalone YouTube could be as big as Netflix. In revenue, they're on pace to catch up. I think YouTube is just an absolute monster for the next 10, 15 years. So I'm sticking with that stock. I think on Apple, really what it's going to come down to here, what people are really going to be focused on, as usual, is the phones. And then I think on the Q&A, it'll be interesting to hear if there are questions about the ongoing issues with Facebook, threats to the take rate in the store. That's really what I think could drive the stock significantly higher or lower, those two issues. And then on Facebook, there's nobody that could do what Instagram does. That's really the bottom line. There is no advertisement platform with that level of data on its users, and all of the threats, all of the privacy stuff, all the political stuff. The stock just continues to make new highs.
This guy's killing it. I mean, this guy's analysis so spot on. I could not agree more with some of the things being said here. Specifically, YouTube. YouTube is so powerful. As a creator, if you are getting paid as a creator, you already know how powerful YouTube is. I did also just buy $120,000 worth of stocks, and I sent out that alert. But remember my saying: never squander a red day. Check out the programs linked down below. You always get my buy-sell alerts in my programs. If you're in the Stocks and Psychology of Money group, and all of them, of course, get access to the daily live streams. We are going to close in 3 minutes. I've got all of the websites that we want up and ready here or not websites, but rather the earning sites. We got Apple, Facebook, Qualcomm, Ford, Teladoc, eBay, MGM, Logitech, Invitation Homes. And I'm even still working on potentially adding a couple here, so we'll see what happens here. I do want to hear what Spotify's saying, because they've had a rough day.
Business headline from the interview, the sports headline, and the headline across all sports sites in Europe was that he is very much interested in making a bid for Arsenal. We'll see if that materializes. Interesting Very quickly, Mike, that podcasting announced yesterday. We might be getting an announcement or more details, from Apple as well later.
We might. A little bit of a muddle in the Spotify story. I think the street is a little bit split on the wisdom of going so heavy in podcasts. A little noise in terms of subscribers versus monthly average users.
Apple, come on. The thing is, the problem for Spotify, in my opinion, is YouTube just crushes it. Because you can podcast videos too. You know? All you need is YouTube Premium. You press play on the video, you lock your phone, and you put it in your pocket. It's that simple.
We've moved a little bit lower here.
It's pretty well mixed, Sarah. Most of the day, actually, the volumes split positive on the New York Stock Exchange, and it remains so. 2 billion shares to the upside, 1.2 decliners. It really is some of the big cap growth stocks that are seemingly dragging down the overall index. Still a cyclical tone. If you also want to take a look at oil, it's perked up as well. Energy stocks up really solid.
Okay, we're going to jump for a moment to Bloom.
Television, radio, YouTube audiences worldwide too. Well, pass through one of the crucial moments of the day, Carol. It had to be really the Fed managing to keep that Goldilocks running.
Oh my God, that's exactly what we just talked about with our guests on Bloomberg Radio. It is a Goldilocks economy. Take a look at how the market reacted. We had a little bit of firming in the equity trade following the Fed decision and Fed press conference, but the yield curve pretty much staying put where it was pre-Fed decision. And I agree. I think the outlook, we all know the Fed's going to be patient. They're waiting for their metrics, Tim, to kind of hit before they make any changes in policy.
Yeah, look, it absolutely makes sense because the Fed strengthened its view of the economy, said those recent inflation looked, quote, transitory. I lost count of how many times Fed Chair Powell said the word transitory, not just in the, in the headlines, but during that press conference. But one point that Carl Riccadonna made on our show was that when it comes to thinking about that metric, it's all about those folks who still remain unemployed, those 8.4 million people.
That's right. All right, let's go ahead and get to the bell. Here we go.
Down 0.3% or so. And the Russell is just higher of the four major averages, the only one just higher. Worth pointing out that Facebook has given up a bit of gains as we approach the close, up only 1.2%, due to report numbers any moment now. Apple slid a little bit in that final 20 minutes of the session, down 0.6%. Its numbers crossing in half an hour from now. At the close, Sarah, down 10 basis points on the S&P, 0.5% on the Dow, and 0.3% on the Nasdaq.
So no record close, but it looks like we're holding the gains. Welcome back, everyone, to Closing Bell. I'm Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street. The Dow closed lower by 0.5%, 161 points. The big story there, weak earnings, or at least a reaction to earnings from Amgen, which took 119 points off the Dow, and Microsoft another 48. The S&P 500 closed down just a bit. It looked like we were going to close higher at a record close, but couldn't quite get there. Energy, the best performer. Technology,
couldn't quite keep it up.
Looking at our best month since back in November, with 2 days left of trading for the month of April. The Nasdaq down about 1/3%. We talked about some of the weakness in some of the tech names, kind of a mixed picture. Some of the winners: Google, Amazon, Mondelez, after very strong earnings. Microsoft, Amgen, Apple, Tesla, all some of the losers. And the Russell 2000 index of small caps higher, the only one of the big four, by about 0.1%. Now brace yourself for a wild hour of earnings. Apple, Facebook, Ford, Qualcomm, eBay, they are all set to report results shortly. We will break down the numbers.
Yep. Okay, folks, let's get ready. I'm ready. Oh, Qualcomm's already out. Let's go. Qualcomm, Q3 revenue. Sees Q3 revenue. So this is a forecast of 7.1 to 7.9 billion. The estimate was 7.12. That's actually a really good forecast for Qualcomm. Qualcomm future estimates very, very strong here. Qualcomm's, okay, let's see here. Qualcomm second quarter adjusted revenue came in at 7.93 versus 7.63 expected. That is a beat. Q2 EPS of 190 versus expectations of 167. That is a beat. Qualcomm is up 5.4% in after hours. Qualcomm, congratulations on Qualcomm's moves. Big 5G play here, folks. There you go. CNBC now covering Qualcomm.
A different story. Qualcomm revenue comes in at 7.93 billion. That's above the 7.6 expected. Also, EPS comes in at $1.90 non-GAAP, above the $1.67 expected. Just as significant, the guide. I mean, Wall Street was looking for a midpoint of revenue at around 7.1 billion for the current quarter. Qualcomm guiding to 7.
All in that guidance, folks.
To 7.9 at the high end. 7.5 billion at the midpoint, significantly stronger than we're looking for. I talked to the executives at Qualcomm just moments ago about the quarter and about the guide. First, on the guide, the chip business is especially strong, and that's why the guide is so strong. Also, the licensing business strong as well. There's a stronger mix in the chip business, and that speaks to, I guess, some of this allocation of chips going toward the high end, toward higher end phones that might bode well for Apple coming in just a few minutes. Also, I heard from the executives that China was particularly strong as well, though there is some variance across regions in performance when we're looking at smartphones in the consumer market, depending on what's happening with COVID. So that is a little difficult to predict.
Yeah, and that's huge, by the way, because Qualcomm is such a big 5G play. Cell phones in China, that market is huge, and getting good performance in that area is so key. That's where you're going to want to see growth, is in the China market. Okay, so looking for other earnings to come through. So really good job on Qualcomm. They've been trading sideways, by the way, for quite a while. They've been stuck in this 140s range, waiting for other earnings to come out. We do not have other earnings yet. We're still waiting. We're waiting for Wyndham, waiting for Apple, waiting for Facebook, waiting for Ford, Teladoc, eBay. We are on standby right now. MGM, Logitech, Cheesecake. We are on standby for these. So we'll listen in here and add commentary.
Here, you're seeing them be able to pump out these chips and get them to the end users. So I like the mixed comments. Certainly, always looking at where you're going to make your profit margins when you're investing in.
Oh, this is really good. Qualcomm has line of sight to improving supply. You want to see that. You want to see improving commentary around supply chain issues. Qualcomm has channeled supply to higher end products. That makes sense. That does also increase prices, though. It certainly increases average prices. But line of sight on improving supply chain issues is absolutely key, especially in the chip market right now. We want to see that. Let's see here. All right, let's keep looking here.
Which was actually a period of time during which most of its competitors or other names in the space were doing really well. And I don't think it's repaired all the technical damage. That being said, earnings are now growing faster than the multiple on the stock. 24 times is reasonable both historically for Qualcomm and for the space. So if they can continue to put up reports like this.
Okay, Facebook in monthly users coming in at 2.85 billion versus an estimate of 2.83. So slight beat on Facebook monthly active users. Operating margin 43% versus estimates of 34.3%. That's crazy. Facebook EPS $3.3 versus estimates of 2.3. That's huge. That's really good for Facebook. Facebook crushes it. Advertising revenue coming in at 25.44 billion versus estimates of 23.2. Whoa, those are really, really big. Big beat on the bottom line, beat on revenue, beat on the monthly active users. We've got revenue growth remains stable, modestly accelerating. That's also very, very, very good. Okay, Ford came in. Ford just came in. Q1 adjusted EPS at 89 cents versus an estimate of 20 cents. Ford sees a year adjusted EBITDA of 5.5 to 6.5 billion. Oh, that's low. They were expecting 8 to 9 billion of guidance. Huge, huge slap in the face on Ford there from guidance. That's not. Let's see if I've got this correct. Let's see. Ford C. Yeah, that's not so good. Ford C is losing about 50% of planned 2Q production due to a semiconductor shortage. That's bad. Big slap in the face from semiconductor shortage, losing 1.1 million units of production this year on the semiconductor shortage. Free cash flow of 500 to 1.5 billion. So 500 mil to 1.5 billion. EPS coming in at 89 cents versus the estimate of 20. That's still very good, though. And automotive revenue coming in at 33.6 billion versus the estimates of 31.25. Let's see if they're covering Facebook yet. Now they're on Facebook. This was big. The Facebook move was big.
Revenue at 25.4. The forecast there was for 23 billion. So as I said, driven by that advertising number.
Ford shares are down 3%. We already covered Facebook. So TDOC sees revenue of 1.97 billion to 2.02. Right along with expectations. EBITDA came in at 56.6 million. That's 10 million more than estimates 46.9. Q2 revenue in line, actually higher than expectations. Expectations of 495 to 505 versus estimates of 483. Of a loss of 199 mil, loss per share of $1.31. Seems like we got a beat on guidance here and a slight beat on revenue. The EBITDA certainly came in $10 million higher, which is a very good TDoc beat. eBay just came in. My gosh, these are coming in fast. Okay, eBay just came in. See second quarter adjusted EPS. Okay, that is really difficult to read. I think the expectation here is 91 cents to 96 cents with an estimate of 98 cents. So that is a lower forecast on eBay. eBay sees net revenue of 2.98 billion to 3.03 billion going forward. The expectation was 2.95. That's good. Maintaining their dividend at 18 cents a share. Better than expected first quarter results. So that's good. Let's see here. Those are the forecasts. I'm trying to get the actual EPS if I can grab it here. But Facebook, Qualcomm crushed it as well. Okay, Q1, here we go. Q1, operating margin of 27.9% at eBay. It's pretty good. EPS of 92 cents. The estimate or net revenue was 3 billion. The estimate was 2.97, so that's a slight beat. Whoa! Active buyers on eBay, folks. Active buyers on eBay, 187 million versus estimates of 147 million. That's a big bump in user growth right there, or active users right now. Big push on eBay. Very, very good. Waiting on Logitech, waiting on Invitation Homes, waiting on MGM, waiting on Cheesecake, waiting on Wyndham. Still waiting on Apple. Nothing on Apple yet. Ford did well. With the exception of this massive slap from the chip shortage and expectations around that. We've got Qualcomm revenue up 52% on smartphone demand. It's going to be interesting to see how Qualcomm reacts to and Qualcomm services react when we see Apple really get into the full swing of what's it called? Oh gosh, hold on a sec. When we see Apple's own chips start taking over. All right, let's see here. Okay, let's keep going here. There we go. Okay, we are still waiting. We're still on deck for Apple. Still do not have Apple here. Facebook expects total 2021 expenses of 70 billion to 73 billion. Yeah, closely monitoring potential impact of European progress. Continued uncertainty around viability of transatlantic data. Okay. Facebook doing very well here. And Facebook kind of been left out to dry for a while here. Qualcomm's up 6.2% after their new forecasts here. Very, very good. We've got TDoc. Just looking for the latest updates here. We've already covered these. eBay is down 6.8% after missing the estimates there. But I'll tell you, the user growth was actually very good. So I want to pull this up again here. What happened at eBay? Because eBay's falling a good chunk here. What was let me see. I want to see what the expectation was for Q1. So the revenue came in at 3.02 billion. I don't see the expectation, but it clearly had missed here. Oh, here we go. Gross merchandise volume. No, gross merchandise volume beat as well. 27.4 billion versus 26 expected. And we've got, see, Q1 net revenue was 3 billion versus the estimate of 2.97. So I don't see where the miss was, honestly, at eBay. In fact, see, adjusted earnings beat, better than expected first quarter results, but it says earnings outlook Q2. So it was the Q2 outlook that missed. So it was not the Q1. Q1 did well, but it was the guidance on Q2. That's right. Oh, I remember this now. Okay, yeah. The guidance for Q2 came in at 91 to 96 cents, but the estimate was for a 96 cent adjusted EPS. So that's why the miss there. So we did have a beat on eBay, but a miss on guidance. That's basically the same freaking thing we saw at Pinterest and Enphase yesterday. They beat on earnings, they miss on guidance. It's that simple. That is the nature of this earnings season, folks. It's a mess. So let's see, what else do we have here? Ford still bouncing around that 3% level on the downside here. Waiting for additional updates. Still on deck is Apple. Waiting for Apple. Facebook posted $26 billion in revenue, shattering Wall Street expectations as income nearly doubles. Facebook revenue rises 48%, slightly below expectations, though. Okay, well, those are very odd revenue. Those are very odd headlines because one is 48% and the other is double. But anyway, yeah, one's a CNBC and one's a Wall Street Journal headline. All right, well, we read the actual details here, so if you need to re-listen to those, just back up a little bit. We'll go to the sticks in just a moment. I am looking for Apple right now. We are waiting for Apple. You know what I really need is like 2 monitors where we can have the sticks up at the same time. Actually, I could do that. You know what? We'll do that in the future. I'll put the ticker, the tape up over here, and then we'll have the sticks up over here. So that way we could show the sticks at the same time. So Clover is running into the after hours here. We've got Qualcomm 5% in the after hours, Facebook 5% in the after hours. Really good moves here. We have Ford down about 3% in the after hours. Sort by losers here in the after hours. We got BTX down about 5%. Ford and GM down because of that chip shortage here. Pretty much the only reason given for a fall here. On the rising side, though, we do have Facebook and Mind Medicine pushing again. Corsair Gaming pushing. Churchill Capital 0.5%. Pinterest up a little bit in the after hours by about 0.5%, trying to recover from the disaster of an adjustment we had today. Let's go ahead and see if we can get Apple. Still no Apple. Still no Apple, but it does say Apple Insider here. Coinbase's debit card may be coming soon to Apple Pay and Google Pay. Let's listen into the earnings alert. What do we have them reporting here?
An earnings
eBay.
beat at 109. The street was looking for $1.
A beat and a miss on future.
Also, revenue slightly stronger than expected at $3.02 billion. The street was looking for $2.972. That revenue also marks a growth of 42%, which the company says is the highest revenue growth since 2005. GMV, that was up 29% to $27.5 billion. The guidance, however, is mixed for the current quarter. So the revenue guidance is above the street, but the earnings guidance is below the street. The company talks about category growth in the United States. Sneakers valued above $100 grew at a triple-digit rate year over year again. Luxury watches in the U.S. accelerated as well. And trading cards in the United States, GMV over $1 billion with active buyers in that category doubling. But shares of eBay are down 5.5% after hours. Back over to you.
Connie. Thanks.
So current release estimated time for Apple, by the way, is 4:30 p.m. Eastern time. So we're showing 4:30 for release. We've got Teladoc, eBay, Qualcomm, Facebook all already released. MGM is expected any minute right now. There we go. MGM just came in. MGM. Q1 adjusted loss per share of 68 cents. Estimated loss was 84 cents. That's better than expected. Loss of $332 million. We've got net revenue of $1.65 billion versus estimates of $1.59 billion. Adjusted loss per share 68 cents versus estimates of 84 cents as a loss. Okay, so MGM has a beat. No word here on guidance. I'm going to put TDoc also on. Some folks are asking for TDoc. So let's add TDoc to the to our watch list here. So TDoc is down 2.27% right now, with CRISPR Therapeutics also down about 2.5%, Ford down 3.46%, and winners at the moment in the after hours being Facebook, 5.4%. Let's see here, watch list. Here we go. We get the full watch list. There we go. And Qualcomm. Cheesecake's also up about 3. Cheesecake's just now spiking. I have a feeling that might mean Cheesecake just reported. Let's take a look here. Cheesecake just reported. Cheesecake just reported in the last 2 minutes here. We have revenue coming in at $627.4 million for Cheesecake. Loss per share of just 3 cents. Net revenue was $3.87 million in the quarter. What? That seems so low. $3.87 million in the quarter. That's it. Anyway, so the consensus was for a 6-cent loss, and they came in at a 3-cent loss, so slightly better than expected. So now they're on MGM as well. Let's give them a listen.
users in the U.S. and Canada grew by 1 million between Q4.
Invitation Homes is out. Invitation Homes releases earnings. We've got Q1 revenue at $475 million. First quarter EPS comes in at 10 cents. Q1 revenue of $475 beat the estimate of $470 million. We've got, looks like, okay here. See, it's just a little difficult to read this. I believe we're suggesting here EPS came in at 36 cents versus the estimate of 33 cents. A little difficult to tell the way this is worded. And then for the year, they're looking at, for guidance, they're looking at 1.34 to 1.42 versus estimates of 1.3 to 1.4. So a little bit better expectations here on Invitation Homes and a slight beat. Cheesecake beating that loss estimate. Nothing yet on Wyndham, and we are about 11 minutes away technically from Apple here. We'll see if that does come out timely. Big moves, though, on Facebook and Qualcomm. Both of them sort of left out to dry there. And, I mean, to think about this, Ford losing 1.1 million units of production due to the semiconductor shortage, and at the same time, Tesla's still kicking butt? Come on. If that's not a sign that Tesla is a butt kicker, I don't know what is. This is absolutely incredible. Absolutely incredible. This is very, very good. All right, what else do we have? So, T-Doc was excellent, boosting revenue forecast, beating estimates. The forecast on eBay, not as good as expected, but still beating. MGM, let's see, continuing to outperform the broader Macau market's gradual pace of recovery. Consumer demand strengthened at domestic partners. Good. Still waiting on Logitech and Apple. Invitation Homes was solid beat. Cheesecake was a beat. Waiting on Win. Facebook still, Facebook still with Qualcomm up about 5%. And still waiting on Apple, which Apple will be announcing ideally within the next 9 to 10 minutes here. We'll see. Woo! That's a lot. Let's go ahead and take a peek at the sticks, see how things are moving in the sticks market. We've got to the downside, 8.9% now on BTX. Momentum movement here. eBay down 5.3%. Ford Motor down 3.4. T-Doc down 3 as well. GM following a little bit. Marathon Digital rotating down slightly. We should look at the 10-year Treasury as well in a moment here. And then to the green side, we do have a big move by Qualcomm and Facebook. Ocugen's also up. Twitter's even moving up right now. And Apple is awaiting earnings, but anxiously as the stock is actually rallying a little bit here, waiting for those earnings, up 1%. Tesla, on the other hand, is pretty much flat, but it's sitting 693 right now on Tesla. All right, let's stand by here for Apple within the next 9 minutes now. Still waiting for those earnings, listening to CNBC.
Change, but says he does see some, quote, froth in the equity markets, attributing it to factors like vaccinations and the economic reopening. Joining us now is Goldman Sachs chief economist, Jan Hatzius. Jan, it's great to have you. I think the big headline from the Fed today was that they're not changing their thinking around tapering or scaling back some of that extraordinary stimulus. He doesn't see the substantial progress he needs to see yet, but the market is going to get ahead of him on that. So when do you pencil that in? I was suggesting maybe Jackson Hole, just as a guess, in August. What do you think?
I think in terms of signaling, that seems like a reasonable guess. I mean, we think that ultimately they're probably not going to taper until sometime early next year, but I think it's going to be a process in terms of communicating about it. Right now, he's clearly not wanting to send any signals, talking about it or thinking about it. But I think there will be a process. And so in the second half of the year, I think we'll be moving in that direction. It could be fourth quarter. I think that's possible. But our best guess would be that it's going to be early next year.
Obviously, the other hot topic of discussion and questioning was on inflation. And he's also sticking to his guns there, saying look, we think it's going to be temporary or transitory. We see it happening because of these bottlenecks, for instance, in the supply chain and the great economic reopening. What do you think? Do you think that there's a risk of a materially higher and more sustained inflation rate coming down the road?
Well, it's not our expectation. In fact, we have a pretty similar pattern to the Fed. We think its core PCE is probably going to 2.4, 2.5% in the April numbers, but then we have it coming down.
This, by the way, is something that's important to talk about as well. On Friday, we're going to get some really big GDP numbers from many different countries. Hold on. Okay, there we go. Yeah, we're going to get some massive GDP numbers coming up on Friday from many different countries. So, I mean, this is really just a huge week for news. We're still waiting on Apple. Nothing yet for Apple. We've covered our earnings now from Facebook. We covered Qualcomm, increase in guidance as well is so powerful. But yeah, the Ford's guidance cut ends high-grade dreams for now. Is a headline coming through here. Yeah, big slam there on Ford, no doubt. And eBay's guidance as well. It's all about that guidance. That's exactly what's burning a lot of companies here. You give weak guidance, boy, the stock market punishes you so fast if you miss expectations. Still waiting on Apple. Apple expected within the next 6 minutes now. Let's go ahead and take a brief peek at the sticks. BTX currently down. What do we got here? 9.42%. TDOC accelerating its decline, down about 4.33%, with a Ford Motor Company down as well. Ford down 3.3%. Microvision ticking a little bit lower, with Microvision only ending up 4.12% on the day. The thing had run pretty substantially during the day, but not ending as high as it was. We've got Facebook and there we go, Qualcomm. Facebook and Qualcomm still running, with Cheesecake also catching up and running along with Facebook and Qualcomm here. Still waiting for Apple. Let's go ahead and listen in a little bit more here. Let's see what we got.
So a pretty substantial slowdown in the growth pace from the very, very rapid pace this year. And I think that's also one reason why the Fed can take their time in terms of moving to the exit.
Jan Hatzius, it's great to see you as always. Thanks for stopping by.
Great to be on. Thank you.
We're just moments away from Apple's earnings, the final countdown to those results when we return.
Yep. Here we go. All right, let's go ahead and listen to Fox for a moment. Let's see what Fox has got to say for us. What do they got? Let's listen in.
Children, really in violation of CDC guidelines, by the way. I do not anticipate, other than maybe talking about Central America getting to the root cause of the problem. I'm all for, private investment down there to uplift the economies of scale to stop this at the root cause. But I'm telling you, Larry, I've followed this issue for so long, and they just really blew it. If they want to go back and renegotiate, call it whatever they want. But as you know, Secretary Pompeo went down there and negotiated these agreements where they had to remain in Mexico pending their asylum claims.
It's always the border crisis. It's the same thing every time. Same thing every time. Let's go pull off this.
Only at T-Mobile.
All right. We are now still 4 minutes away. Let's see what we got here.
Well, what does it mean to buy weakness, though? Well, we recently published a study showing that with this many stocks above their 200-day average, traders should be buying minor pullbacks below the 20-day average. So I think a 2 to 3% pullback, S&P 500, 4085 gets that done.
And in our remaining time, Ari, let's talk about value and growth, because some people seem to think that you're either in one or the other, but you think that both small cap value and small cap growth are going to work nicely together.
We think so. And listen, we like to deliberate about relative returns as much as the next guy, especially when it comes to value versus growth. But it's important to stress that both value and growth are working together. So the top panel is Russell Value, which continues to hold support and trend higher. Bottom is Russell Growth, which is breaking above its February peak and reasserting itself too. And I think this speaks to the broadness of this advance with different styles taking turns leading the market higher. It's okay to own both technology and financially. In fact, I don't know how tech has become a safety sector. It's been one of the most early cycle sectors through market history. It typically outperforms in a rising market tape.
Right.
We like tech and funds.
Well, you know, Ari, it's always amazing because last year when we were talking about tech as safety, I was kind of blown away by that as well. Ari Wald of Oppenheimer, as always, thank you for joining us for Smart Charts. From New York, this is Bloomberg.
Okay. Now, that is very interesting about tech typically outperforming in the bull market. I like to agree with that, which is why I'm so exposed to tech. However, tech does go through its turbulent periods. All right, let's listen in while they're waiting here for Apple along with us.
In the March quarter, as well as into June. And you combine that with services, I think it's the biggest product cycle year we've ever seen from Apple. When they start to put a further stamp on that, especially even on guidance going into June, I think it shows that this is a stock heading, we believe toward $3 trillion in the next year.
Ed Lee, with a minute left or so until the numbers come out, it is moving higher in after hours, up 1% or so. What are the key things you'll be watching out for?
I mean, I agree with what Dan's saying. I think, expecting a strong quarter. I always like to look at the services revenues, that's the media side of things. But just because what we've seen in the trend with Google yesterday and Facebook just now, there's just more people spending more time on their phones. So that's likely to sort of give an extra boost to that side of their business, which is now their second largest business after the iPhone.
I guess, Wilfred, one of the other questions is whether we'll see the quintuple double, as one of the analysts called it, which means double-digit growth in all four of its major product categories. Remember, it's seen a big surge for PCs and for
20 seconds.
Quintuple, sorry, 5. Yes, thank you. In all 5 of its categories. And we saw that last quarter. And one of the questions is, are we going to continue to see that momentum in not just iPhones, because the economy has been reopening and people maybe aren't working at home as much? So I think that's one of the keys beyond the iPhones.
If you haven't got your own countdown clock,
here it is.
10 seconds.
Okay, EPS for second quarter 1.4, net 23.6 billion. Oh my gosh, there's so many updates. Oh my gosh. Product revenue came in at 70, big beat, 72.68 billion versus estimates of 63 billion. That's a big beat. Mac revenue coming in at 9.1 billion. iPad revenue 7.81. iPhone revenue 47 billion. Oh man, these are a lot. iPad revenue coming in well above the estimate, 7.81 billion versus 5.65 estimated. Services revenue even beat at 16.9 billion versus 15.65 estimated. Mac revenue coming in at 9.1 billion versus an estimate of 6.8. That's a huge beat. Huge beat. Wearables coming in at 7.84 versus 7.52. Not as big of a beat there. iPhone Greater China revenue came in at 17. iPhone revenue coming in at 47.94 billion, which beats the estimate of 41.49. This is a huge beat by China. Very, very big. Returned more than 23 billion to shareholders. EPS at $1.40. Sales coming in at 89 bill. Operating cash flow 24 billion. Wow. EPS coming in at 140 versus estimates of 99 cents. This is a huge beat. New cash dividend up from 20.5 cents to 22 cents. Record for the quarter. Oh my gosh, this is one of my bigger positions as well. This is massive news for Apple. Let's see how the stock is doing here. Apple up 3% in the after hours. Big move there by Apple. Wow. Big move by Apple. I wouldn't be surprised if this continues to extend. These are some really big beats by Apple. I mean, I'm absolutely blown away with some of these beats here. I'm going to go ahead and pull them up again. Apple jumping about that 4% right now. I really want to reiterate here the products revenue coming in at 72.6 billion versus 63. That's a beat of 15%. The iPhone revenue coming in at 47.94 over 41.49. That's also a beat of 15%. That's insane. The wearables didn't beat as much at 7.84 divided by 7.52. Wearables beating by only 4%, so not that kind of a big beat by wearables, but the iPad revenue beating by 38% beat on the iPad revenue. My gosh. And Mac revenue beating by 33% as well. Oh my gosh. It's incredible.
Overextended in the short term.
Let's get back to Josh Lipton. He's got comments from Apple CEO Tim Cook on the quarter. Josh.
Sarah, I did have the chance to speak with Apple CEO Tim Cook about the quarter. I want to start with iPhone. Again, $47.94 billion in the quarter versus expectations of $41.4 billion from the street. Here's what Cook told me. iPhone grew 66%, he said. And it was driven by strong demand from the iPhone 12 family. The iPhone 12 is the most popular iPhone, but we had extremely strong results in iPhone 12 Pro and iPhone 12 Pro Max. The carrier deals, Cook telling me, in the U.S. are supercharging demand. In the U.S., it is a highly competitive marketplace, and you see iPhone doing extremely well around the world. To that point, I also did ask Tim Cook about what the trends and themes he's seeing in China. Cook telling me we are seeing strength across the product line in China. iPhone did extremely well, but Mac, iPad, wearables, home and accessories also did well. We had the top 2 selling smartphones in urban China. And finally, on this Mac number, again, 9.1 billion versus expectations of 6.9 billion. Cook saying we're seeing strong first-time buyers on the Mac. It continues to run just south of 50%. And in China, he told me it's even higher than that. It's more around 2/3, and that speaks to people preferring to work on the Mac. Again, conference call, guys, at 5 p.m. Eastern. Back to you all.
Josh Lipton, thank you very much. Valuable comments there from Tim Cook. Ed Lee, I'll come to you. We haven't heard from you yet. 66% growth in iPhone. You heard Cook describe the momentum in different parts of the world and in different parts of the portfolio, not just in the phones. What's your impression? Why does this come as such a surprise to the street?
Well, so first of all, I'm going to give it to Dan Ives on this because I've always been sort of a super cycle skeptic, but clearly there is a definite super cycle, and that's what we're seeing.
Yeah, no, this is an incredible move here for Tesla. Sorry, for Apple, not Tesla. Really, really incredible. So let's take a peek at the sticks here, just see how things are behaving in the after hours. We've got Cheesecake Factory up 6.49%. Smashing expectations. Really, really good here at the Cheesecake Factory. We did see and cover those earnings. So congratulations to the Cheesecake Factory. We've got, what else do we have here? Facebook up 6% as well. Qualcomm up 5.6%. Apple up 3.76%. Really great here. Ocugen jumping in the mix. Pinterest trying to recover a little bit, up 0.62%, but after that pretty bad and weak guidance, a lot of enthusiasm kind of got removed from pins there. Not so good. BTX down that 6.59%. Ford down 3%. eBay down 5.57%. Teladoc 3.36%. And then multiple other stocks sort of mixed in and phased down about 1/4. And Apple, or rather Tesla, down 0.3%. But really good moves there by Apple, now up over 4% in the after hours. Both stock, all of these numbers here, just really mind-boggling. It just goes to show how strong this recovery is. And a lot of folks are going to see this initially as inflationary, and rightfully so. In the short term, it's going to be inflationary. But in the long run, these earnings are going to propel these companies to much higher valuations. As these companies propel to higher valuations, these tech and consumer discretionary companies, we're going to see all tech and consumer discretionary move up. And if inflation tapers away, we're in for a potential boom in the markets. We'll see how it goes. But these are some very, very big moves. Here. Yeah, somebody here says my stocks keep going down, and sad face. The way to look at it is rising seas. What is it? Rising seas raise all ships, or whatever it is. Rising tides raise all boats. Who cares? Whatever the saying is. Once you get valuations going up at companies like Apple and Facebook and some of the other companies winning today, whether that's Cheesecake or Invitation Homes or whatever, when you see these numbers go up, even the laggards, eventually they get back on course and you see them pump up as well. So, but yeah, very, very, very incredible moves here. Apple absolutely just crushing it here with the market cap that Apple has. A 4.36% movement is absolutely incredible. Very, very strong movement here by Apple. So good job, Apple. let's take a brief peek here and see what Bloomberg's touching on.
Include AOL and Yahoo. We'll see more about what the plan is there, but probably not a huge surprise that those are assets that may be on the block. More next. This is Bloomberg.
All the winners, big moves of 5-6% here after hours. eBay and Ford lower. We'll be right back.
All right. Wow. Absolutely incredibly strong, I have to say. Overall, very, very strong market close. Very, very strong movement and some very big names. Very good for the market. I would expect the S&P to be very positive tomorrow. We'll see. And we'll see if that ends up pulling up against some of those laggards over time. Still expecting that volatility over the next 4 to 6 months. We'll see how it goes. If you haven't watched the Jerome Powell summary yet, I'm about to post a video on a J. Powell summary. So that way you can catch up on the summary. So that video will be live in about 2 minutes. So stay tuned for that. Maybe check back in about 5 minutes or so and you'll see it up. But otherwise, folks, thank you so very much for being here. I did post a little comment on what I spent $120K on today in stocks that I'm excited about for the long term. And folks, thanks again for being here. Check out the programs linked down below. Use that 39% off coupon code expiring on Cinco de Mayo. We'll be back as well with a rescheduled date for the Kevin O'Leary and MindMed that we're all looking forward to, and more interviews coming soon. Thanks so much for being here, folks. We'll see you in the next live stream. Check out those links down below. Bye.